Hey everyone, welcome to NTX Inno's State of Innovation virtual event today. I'm Kevin Cummings, staff reporter for NTX Inno, and we're glad to have you here. Blockchain technology is on the rise in North Texas and across the US, as the potential to empower multi-billion-dollar industries and create thousands of jobs. And Texas has already enacted some regulation related to technology, including bills that have enabled the use of corporate books on blockchain and encourage education in cybersecurity and other blockchain adjacent technologies. We're excited to have some experts joining us today to talk about the trends and developments in the industry. But before we get to that conversation, for anyone unfamiliar with us and what we do, Inno is a growing part of a network of sites. We're currently in 16 markets, and we're committed to covering and connecting local technology, startups, growth, and innovation. We've actually just announced our 17th market, Orlando Inno, which will be coming up later this month. NTX Inno has been covering the North Texas ecosystem since August 2019, and we do that through daily stories, a daily newsletter, quarterly events, and more. You can check us out at ntxinno.com and sign up for The Beat, our daily newsletter. The Beat's really the best way to stay plugged into everything that's impacting the local innovation economy. I also want to take a moment to thank our sponsors, without whom this event would not be possible. They've stuck with us through these difficult times and helped us to pivot to this virtual platform. Today's presenting sponsor is Thomson Reuters, and I'd like to thank our founding partners, Accenture and UT Dallas. Please check them out. They're here to support you. And also to talk a little bit more about that, I'd like to introduce Amanda Hart from Thomson Reuters to share more about their mission and how they're helping the local innovation economy. Amanda, welcome and thanks for being here today.
Awesome. Thank you so much, Kevin.
Yeah, well, I guess, sorry, go ahead. I was going to
No, you go ahead.
About Thomson Reuters and your mission.
Yeah, absolutely. So as Kevin mentioned, my name is Amanda, and here at Thomson Reuters, I am specifically focused on founders and earlier stage companies and really learning more about how we can better serve the startup ecosystem. And so Thomson Reuters is one of the world's most trusted providers of answers. So essentially, we empower companies to do more with less by leveraging our industry expertise and content. We're here to help organizations of all sizes manage risk and streamline their workflow. And we're really on a mission to help folks advance their businesses and gain competitive advantage through the insights and information we provide. So I know that's a lot of words thrown at you, but really we help companies get the tools and information they need to keep their companies protected while they grow.
Yeah, and I guess why is it important to support the local innovation community like for Thomson Reuters?
Yeah, absolutely. So for us, it's important to support the local innovation community because we understand how valuable startups and entrepreneurship is to innovation and progress. So here at TR, we want to help support the startup ecosystem to ensure that companies get the resources they need to continue to innovate and really make a difference in the world. So as someone who has worked with startups for the past couple of years, I've seen the remarkable impact that they have in their communities. And it's important that we continue to help strengthen that ecosystem so more and more startups can continue to thrive. So from life-changing software solutions to innovative technology developments and more, the change that comes from startups is crucial. And we want to help be a part of that. We also recognize that it is a two-way street. So while we feel we have interesting solutions that can help startups feel more confident, as a big corporation, we also have a lot to learn from startups and the entrepreneurship community.
Yeah, and obviously there's a lot of risk involved in being in a startup, and there's a lot of risk kind of in the world today with this global pandemic and everything. So what are some of the biggest challenges that your clients are faced with right now?
Yeah, great question. So a big challenge that I continue to hear from founders is that it can be pretty difficult to navigate all of the administrative and procedural aspects of starting and growing a company. So really the things you don't always think about and the not so fun stuff of starting a company, that can get in the way. And so there are a lot of unknowns that come up in the first few years, as I'm sure a lot of folks on this call know, and especially in regards to legal and HR. And so getting some of that legal and HR and tax support necessary can become incredibly expensive for earlier stage companies and actually really time consuming. And so I continue to hear from founders that this actually can take away from their focus on growth and innovation. So I've spent the past couple months talking to a little over 60 founders, learning more about kind of their challenges in these areas. And a couple quotes I wanted to share because I think that does a better job than myself of explaining the challenges is one of the founders said to me, I wish I could spend more time at work doing what I'm good at and why I started my company and less on the administrative and operational side of the business.
Not the fun part.
Yeah, not the fun part, right? And she said, but it can be really hard to manage. I don't always know where I should spend my money. How do I prioritize what's important? And so that was one. And then another founder said she had spent 4 months working on creating all new policies for their company because the resources were so spread out online. She didn't always know what information to trust and where to look without spending a ton of money. And it ended up taking her 4 months to do something that she's like, ideally, I would get done in a couple hours and I could go back to focusing on the growth. So yeah, go ahead, sorry.
No, well, I guess the obvious follow-up would be, where does TR step in and how have you been able to help them with those challenges?
Yeah, amazing. So here at Thomson Reuters, we've actually been able to help founders get access to a self-serve legal and HR resource that actually provides 24/7 access to the compliance and kind of business operations information that they need. So this has been able to allow founders to make quick, informed decisions on their own without always needing outside counsel or additional support, but still making sure they are covering their bases when it comes to risk. So for any founders or CEOs on the call, if you're like, yep, this is an area where we could absolutely use more resources or don't want to have to handle all of this on our own always, in the follow-up email, we will have an awesome opportunity for folks to get into a early trial specific for founders and CEOs.
Yeah, it's awesome. I guess beyond, those pressing challenges right now, what other resources do you guys have available, especially for, tech-enabled startups?
Yes. So I touched on this a little in the previous question, and to be fully honest, we have a lot. Talking, upwards of a couple hundred different solutions kind of under our umbrella. So I'll keep it really high overview. And if anyone else wants to follow up with specifics, they can. But really, we focus on providing products and services in the tax and legal space that help startups set a really strong foundation up for their future growth. And so I know tax and legal compliance, while not always fun, are a necessary component of starting a business. And in the early stages of the company, it can be challenging to find a lot of time to focus on those. And so that's really where we come in. Our solutions provide that information and the tools that they need in the tax and legal space so that we can allow founders and startups to spend more time doing what they love when they're growing their companies.
Awesome. Well, hey, thank you so much for joining us and just talking a little bit more about how you guys are here to help. I really appreciate it.
Awesome. Thank you so much, Kevin. And thanks so much, everyone, for allowing me to chat for a few minutes.
Yeah. And again, thank you to our presenting sponsor, Thomson Reuters, and our founding partners, Accenture and UT Dallas. So without further ado, we will jump into talking about blockchain here. I'm just going to go ahead and let our panelists introduce themselves and tell us a little bit about what they do. Natalie, you're first on my screen, so why don't you take it away here?
Sure. Hi, everyone. My name is Natalie Smallinski. I lead business development for a blockchain-based credentialing solution. I'm actually an entrepreneur based here in Dallas. I helped found the company that developed this credentialing solution, and we successfully exited it to Hyland last year. So I'm now part of the Hyland Credentials team.
Awesome. And Mance, you're next up on my screen here.
Hello, everyone. I'm Mance Harmon. I'm the co-founder and CEO of Hedera Hashgraph. Hedera is a global public network that makes it possible for developers to build arbitrarily complex distributed applications. We're a layer one protocol for those of you that are familiar with the industry. We have fantastic tech in the Hashgraph. It's an alternative to blockchain. Solves the same category of problems, but far more efficiently and securely. It's really fast compared to the first and second generation technology and low cost. But equally important is our governance model, our governing council. Hedera Hashgraph is made up of a global council of 21 global organizations. The names include Google and IBM and Boeing and Deutsche Telekom and Nomura and Standard Bank out of South Africa, Shinhan Bank out of Korea. This caliber of organization, they're 21 today, growing to 39, and they are Hedera. Hedera Hashgraph is this council of organizations running this global network.
Awesome. Well, thanks for joining us. And last but not least, Hamiz.
Everyone, this is Hamiz Awan. I'm the partner and founder at Plutus21 Capital. We are a multi-strategy investment firm here in Dallas, and we focus on blockchain infrastructure investments.
Awesome. Well, thank you guys all for joining us here today. I guess we'll just start off with the recent news of the day. Before I hopped on here, I was reading an article about how the crypto markets have dropped, I think about $1 billion because of the FBI finding some of the ransomware money and calls for more regulation in the market. So does anyone have a take on that, or just kind of talk about how general volatility in the market affects your business?
Yeah, I think that there's an overreaction. There seems to be this thought that maybe the US government figured out a way to hack the Bitcoin blockchain to recover this money. From the 10 different explanations, that's probably the least likely explanation for this whole thing. But we are in a market that is heavily driven by tourists still. And so those kind of explanations tend to scare tourists, and that's just what it is. But I'm not saying it's impossible. I'm saying it's from the 10 different probable, causes. That's probably the least likely.
Yeah. Does anyone else have a take on that?
Yeah. So, we're in the midst of a historic learning curve right now, both in the US and globally, around the nature of cryptocurrencies, and specifically Bitcoin, because it is by far the largest by market cap, has the widest adoption. What we're seeing now with this news that broke today is the realization that hot wallets are stored on servers. And so even if you own your keys, if it's a hot wallet, the server on which it's hosted can be requisitioned by the government, and it can also be hacked. And so the narrative, as always, going back all the way, to 2013, to Mt. Gox and others, it's not that Bitcoin was hacked, it's that a wallet was compromised. Right. In this case, initially on the pipeline side by hackers, and then the hacker's wallet was compromised by the government with a warrant. So this is why cold storage is so often stressed by cypherpunks and the cryptocurrency community. Cold storage basically means you're storing value offline on a hardware device that cannot be accessed so easily.
Right. And Mance, do you have anything to add to that, or?
Well, I mean, this is just another day in the life of crypto. I mean, the industry as a whole is very young. The valuations are largely based on expectations of future value. It's rarely the case, very infrequently is it the case, that you can actually point to strict fundamentals that for any given valuation out there today. And, in a world where influencers can swing markets the way that we see it happening in this industry, it's just an indication that the industry is still young. And as the industry matures and grows up and real products and services that are adding real value using this underlying technology go to market, that'll all change. And we see it happening very quickly. It's very rapidly taking place, but we're not there yet.
Right. Well, and kind of going off of that, everybody kind of mentioned that there's a learning curve going on along this technology. The Texas legislature just recently wrapped up. Natalie, you work with the Texas Blockchain Council. I guess talk a little bit about the work that you guys were able to do this session, and also kind of about the barriers to adoption that you guys kind of faced getting that through.
Yeah, sure. So the Texas Blockchain Council is about a year into its operations now. So we're a very young organization, and we were founded at a critical moment for blockchain adoption in Texas. I mean, we really hit a rich vein of interest in this technology. And that has been borne out both by the interest in our legislation that we've researched and helped push through, but also in the rapidly growing ranks of members who have joined over the past year. So we researched 4 bills initially. 3 of them made their way to the Texas Senate, and then 2 of them passed the Senate. One has already been signed by the governor into law, and the other likely will be next week. So the 2 that made it through the Senate were one bill to form a blockchain work group for the state of Texas, in other words, to create a body with the political mandate to set blockchain policy in Texas. And then second was a virtual currencies bill that helped define virtual currencies, that helped ensure that security interests against virtual currencies could be properly perfected, and clarified some other outstanding legal issues as pertains to digital currencies. The purpose of that bill was to provide legal clarity for financial services providers so that they feel comfortable setting up shop in Texas or serving customers based in Texas.
And I mean, obviously the setting up a work group kind of sets you guys up for future legislation. So I guess why is that an important first step, and where do you kind of go from there?
Well, it's when you're crafting a policy approach at the state level, it helps a lot to have a body with the political mandate to actually set that policy. So this has been a very successful approach in Wyoming, for example. So that rather than having, 1,500 competing voices and disparate interests and lobbying groups and trade associations and points of view, you actually have a more sustained deliberation and debate. And then you can come to shared conclusions that actually do have the political mandate to be acted upon.
Yeah, and you mentioned Wyoming. That state comes up a lot when I'm reading about kind of emerging blockchain markets. And I kind of like to hear from all our panelists on this one. I guess what makes Texas, primed to be a hub for blockchain and blockchain adjacent technologies? And Natalie, if you just want to start us off here.
Sorry, can you repeat that question?
Yeah, I guess what makes Texas primed to be, a hub for blockchain technologies?
Sure. Well, I mean, first of all, the size and dynamism of the Texas economy. We're an extraordinarily vibrant state, for our ethos and state brand, being a business friendly state has been critical. We've seen over the past year a texodus of firms from the West and East Coast relocating here, hoping for a friendlier climate. And so it makes sense for Texas to embrace a cutting edge technology like blockchain, which is not just creating new businesses and business models, but entirely new industries. I mean, it's a trust infrastructure for the World Wide Web. And so there's extraordinary potential that in the same way, the development of the web created the tech economy that we are seeing, really drive US GDP growth today, that blockchain technology could do something similar over time.
Yeah, and I guess, Mance, since you're building a blockchain technology company here, what advantages does Texas have for you guys?
I would echo a lot of what Natalie's already said. We chose Texas. We were in California 10 years ago, more than actually 15 years ago, and we chose to move here and set up shop here in Texas. Not Hedera, this is pre-Hedera, but then Hedera, we moved to Dallas, in fact, to set up Hedera. The economy is fantastic. Not just the size of the economy, but the diversity and the in the economy. There's a lot of tech talent here that can be tapped into. Texas has been a leader in a lot of industries, and I think that a lot of the United States has decided it's the future leader for the U.S. in terms of a range of industries, and I'm certainly expecting crypto to be one of those. And so, as Natalie's pointed out, when the TBC got formed a little more than a year ago, about a year ago now, just the reaction, the response was overwhelming. I think that's just indicative of a broader sort of macro movement and macro understanding of what's happening in Texas, and the interest and how people and companies can participate in that success.
Yeah, absolutely. And Hamiz, do you have anything to add to that?
Yeah, no, I completely agree with Natalie and Mance. I think that, blockchain is just really a platform that's going to be used by entrepreneurs and innovators to build in all kinds of industries. And one of the best things about Texas, and specifically Dallas, is that we're very diversified. We're very diversified in terms of industry. And so because we think that, these platforms are going to impact so many industries, it makes sense to be in a place that has, a little bit of real estate, a little bit of oil and gas, a little bit of tech. And you kind of need all those industries to come together because we think that this can impact all of them. So I really think it's a perfect mix of just the talent pools, just the different industries that have, strong holdings here. And it makes it a perfect place for the innovation to happen.
Yeah, and you guys invest in companies in this space. So I guess locally, what are kind of the trends that are emerging here in DFW?
Yeah, so most of our investments are actually more global in nature. That's just the nature of the space. Is a lot of the entrepreneurs here are trying to solve problems that are far bigger than just Texas's specific problems, including Mance. And so I think they're trying to solve problems that affect a lot more people in a lot of different geographies. And so we are pretty agnostic to that and open-minded about that. We've always felt that the adoption will happen wherever the need is the greatest. And so a lot of the problems that we can potentially solve with this technology are actually problems in the third world and are problems in emerging countries and economies. And so we actually see those in the adoption numbers as well. We're lucky to be in a country with a pretty stable financial system, pretty stable, legal system. And so the adoption here, I feel, is more investment focused. So a lot of the investment dollars are flowing through the US and flowing through Texas, but a lot of the solutions are being implemented faster outside of the US.
Yeah, and I guess for you, when you're looking at a company to invest in, a lot of startups, they are all going to change the world. But I guess what are you looking for in a company when you're looking to invest in them?
Yeah, it really is the case that, across the board, you have some great concepts, great ideas, great teams, but it's really very difficult to identify a winner amongst these thousands and thousands of, great teams and great concepts. So what we like to do is we like to focus on adoption. We think that the main durable competitive advantage in this open source environment are network effects. The winners are going to be the networks and the platforms that have the most users and the most developers building on them. And so we're usually investors after somebody's already proven that they have, let's say, about 10,000 users and 10,000 sticky active users that love their product or service. And so we're a little bit later in the stage for most companies, but we feel that it's much easier to identify a project that can go, that's already at 10,000 users, identify whether it can make it to 1 million users, then identify something when it's at 0, and try to figure out whether it's going to make it to 10,000. So we're a little bit later on the spectrum, and the main focus for us is adoption and how sticky that is.
Yeah, and I guess kind of tying these two things together, adoption. Natalie, you successfully exited a company, and now Hyland is working with, I think it was the Secretary of State here in Texas, correct? So I guess, talk about kind of that proof of concept work that you guys did, and I guess kind of what was the outcome of that?
Sure. So, you can think of blockchain as a verification infrastructure. This is why it is so successful at securing transactions, financial transactions. That same infrastructure can be used to validate digital identity and any kind of digital claim. And so it's naturally of interest to government entities who issue things like vital records, business incorporation documents, licenses, et cetera, et cetera. So a number of governments have actually developed their own blockchain infrastructures. I'm thinking of the European Commission, for example, and the European Blockchain Services Infrastructure. The state of Texas has taken an exploratory approach where they're looking at different ledger technologies, specifically Hedera. And Hyland was able to use our credentialing software to anchor electronic apostees to the blockchain using the Hedera consensus service. So it was a really successful proof of concept. It actually caught the interest of the Hague Conference on Private and International Law. We demonstrated the solution for the Hague at their experts meeting in May on the electronic apostille, and it looks like it's gaining significant traction.
Awesome. Well, and I guess governments aren't necessarily known for being the fastest moving things. I guess, did you guys face any kind of pushback in getting them to kind of work with you guys?
Well, in the case of Texas, they were actually the ones who approached us. So they were ready and willing to experiment with blockchain technology. Often with government entities, like with any other type of organization, it all comes down to leadership. If there is a leader in that organization who is courageous and who's willing to try something new, then they can often move mountains.
Mm-hmm. Well, and you mentioned some of the work that Hedera is doing. So Mance, you guys recently launched, I should probably have this pulled up, I think it was the Hedera token service. I guess kind of talk about what that is and kind of how that moves kind of this technology forward.
Yeah, the Hedera token service makes it possible for those that want to issue tokens, digital tokens, to do so. And to do so cheaply and easily with high security, a lot of features that a token issuer might care about. But maybe it's better to sort of set the context here so that the audience understands what we mean. Blockchain, quote, Hashgraph in our case, really solves some problems that are going to result in multiple waves of business innovation. 20 years ago, we had the emergence of the tech giants that exist today because the internet, the web, made it possible to realize efficiencies in marketplaces that was previously not possible. But what's happened is that these organizations are now huge, giant, fantastic efficiencies in markets, but lack of transparency. And what blockchain or Hashgraph in our case makes it possible to do is realize transparency in business processes. That's sort of the first wave. Mm-hmm. The second wave, which is happening at about the same time, is in tokenization. And tokenization simply means anything that's of value, any asset, whether it be a real asset or it could be intellectual property or products and services, or anything that has value, can have a digital representation on a ledger, a public ledger. And by their design, it makes it easy to transfer these tokens from one party to another. It removes the friction in transferring the tokens. The tokens represent rights. It could be dividend rights, it could be voting rights. They have various uses. That second wave of innovation is going to be realized through the tokenization of everything. The world is going to become a tokenized world. Everything you see and touch, everything that has any value is going to have a digital equivalent in the form of a token. And then finally, the result of the world becoming tokenized in the increases in efficiency that result from that is going to result in decentralized marketplaces. And so we're going to make the transition from centralized marketplaces that emerged with the web through process integrity and business integrity, so that we have transparency into some of those centralized organizations. Tokenization reduces friction, changes the fundamental infrastructure of finance, resulting in decentralized marketplaces. 3 waves, all at various stages of maturity today. What Hedera does is it enables all 3. It has services that makes it possible to implement and go to market with any of those business models.
Yeah, I mean, I guess this would be a good point to kind of ask. You mentioned kind of at the beginning how Hedera kind of operates differently from other kind of blockchains. I guess, can you kind of go into a little more detail about that?
Well, the tech, number one, it's not proof of work blockchains. For one, it's not blockchain at all. And 2, it's not proof of work. Proof of work is the first generation tech that was introduced with Bitcoin, and then Ethereum still on proof of work today, trying to move off of it. This is the old tech that is so expensive in terms of energy usage, right? It's, this is what all the noise in the market has been about recently, especially with the Elon Musk tweets and that sort of thing. It's an energy hog by design. Proof of work blockchain by design is designed to use a lot of energy. Our tech is just the opposite. It's designed to be as green as possible, frankly. And the platform today is one of the greenest, least energy consumptive platforms of its kind. So that's a major difference. It has the performance improvements that one would hope. When we talk about performance, today we can handle 10,000 transactions per second. Bitcoin today is a global network, to give you a sense, 7 transactions per second. And just the difference in performance changes the whole cost structure. We can process a transaction at a fraction of a cent versus tens of dollars per transaction. And then the governance, this global governing body provides the trust. When we talk about governing, they run the network, but then they make decisions on the product roadmap, what the features are going to be, what the regulatory posture is of the organization. It's a global network that is governed by global enterprise that have the intent of building enterprise grade distributed applications using the same network. There's nothing else like it in the market, and those are its differentiators.
Yeah, and you mentioned the governing council, and so I guess, like, how do you balance working that regulation into something that's supposed to be inherently decentralized?
So the regulation issues typically arise in the characterization of the token. Mm-hmm. There are a couple of ways to think about decentralization. One is in how the network of nodes comes to agreement and putting transactions in order. Think of it like a big distributed database where all the nodes in these databases run by the different council members sort of vote on the order of transactions. Mm-hmm. And we and other networks are distributed in that sense and growing in terms of decentralization. over a period of time becomes increasingly decentralized. Secondly, there is governance and decentralization of governance. In the first generation platforms, you have a bunch of developers basically making all the decisions, core developers. In our case, we intentionally built a governing body that is by design the most decentralized governing body, in that there's no single industry that dominates. It's cross industry and representation, global in its representation, cross geography, and finally decentralized through time, that the governing members can't stay forever. They have to leave after a max of 6 years. So the decentralization in those two dimensions are from the beginning designed to be as decentralized as one can make it. And that then, of course, plays into the regulatory environment and the characterization of the token and how the token is used for security and utility of the network.
Right. Well, and Natalie, since you guys work, with the government, with the Texas Blockchain Council, what does that kind of balance of regulation and decentralization look like on your end?
Yeah, well, decentralization is not a universal characteristic of the entire software stack, right? So it's really important to characterize accurately where decentralization is actually happening.
Right.
In the case of Bitcoin, decentralization is basically pushing value and verification of value to the edge of the network. So instead of having to check with a centralized governed entity, like let's say a government office, every time you need to validate a record, it is the ledger itself that's distributed in nodes replicated around the world that serves as an anchor point for the validation of that claim. And so what that enables is something called individual self-sovereignty, meaning that now I, as an individual person, can attest to the fact that I own this money, that I own this digital identity, and that these claims about me are true, whether or not the entity that sent me the money or issued the claims about me even exists anymore. And so this solves a huge problem, not only in that people regularly lose their vital identity documents, or they get destroyed or invalidated, and it's cumbersome to get new ones, but the fact that even government institutions don't last forever. When we were launching our business, the civil war in Syria was raging, and you had the world's largest refugee population, some of whom were literally risking their lives to go back to their high schools to get their diplomas, to prove that they had graduated from school so they could find employment in their other countries. And some people lost their lives doing this. So self-sovereignty enables a kind of individual custodianship of these claims that is digitally reproducible, but not alterable. And so because it prevents fraud, you can now push that verification to the edge of the network and the ownership of claims to the edge of the network. Now, when you talk about actually issuing those claims, you're talking about a set of business processes and workflows that don't particularly need a blockchain network. All of those problems can be solved on a traditional, by now, SaaS model of software services infrastructure. And that's where companies like Hyland come in. We provide content services for governments and other entities. So does that make sense? There's centralization at the layer of the application. There's decentralization at the layer of ownership and verification of claims.
Yeah, and you mentioned one of the most kind of visible, or I guess talked about aspects of kind of blockchain right now is Bitcoin and cryptocurrencies. And Hamiz, I wanted to ask, with kind of the volatility that goes into the crypto market, how does that affect your business, and does it affect your investments at all?
No, not at all. So the value in terms of USD of any particular cryptocurrency does not change the integrity of the ledger. The immutability of the ledger is the same whether Bitcoin costs $3 or $54,000. The only thing that changes is the cost of anchoring transactions to a network. If we're talking about a public blockchain that has a pay-to-play fee model. So you can think of public blockchains kind of like toll roads,
right,
where you pay to drive on them. And the more people who are trying to drive at the same time, the more expensive it is. This is one of the problems Mance is trying to solve, with Hedera is saying like, well, let's actually take a permission blockchain approach where we can keep those transaction fees much lower because we have a governing consortium that's actually funding the maintenance of this network. So it doesn't have to be publicly funded like a public blockchain. So whether our software is using a private or permission chain or a public blockchain, the fee structure may impact business model, but there are also technical ways to abstract away from on-chain transaction fees. So like in the case of Bitcoin, there's a whole ecosystem of layer 2 applications that's now developing that allows you to condense thousands or tens of thousands of transactions onto one single on-chain transaction, which makes the on-chain transaction fee problem virtually nil. So there are many technical ways of approaching that.
Yeah, well, and Hamiz, with Plutus, you guys are kind of working on the investment side of things. How does that volatility affect you guys and your investments?
Yeah, so your North Star has to be something other than price. Just because a project has raised a certain amount of capital, or just because the price of some token is rising, has very little to do most of the time with its underlying usage and how much value people are finding in using that product or service. And so if you stare at prices all day, first of all, you're going to go crazy because they really have very little to do most of the time to the underlying fundamentals. And so your North Star has to be something else. Short-term price movements, if you truly believe that these blockchain networks are going to disrupt entire industries, then you have to have a very long-term view, because this transition is not going to happen over 6 months, or it's not going to stop happening because Elon Musk tweets about it, right? Either this transition is going to happen over the next 10 years and completely disrupt our current industries, or it's not. There's not going to be a change because one CEO or one investment firm goes one direction or the other. And so you first have to, understand that view and subscribe to that view. And then if you subscribe to that view, what happens in the interim, it becomes quite irrelevant to you as a long-term investor. And so we will get really concerned if prices are falling and adoption for the overall ecosystem is falling. But if prices are going up, down, sideways, doesn't matter, but adoption is either consistent or increasing, we're interested in the technology. So it really has very little to do with blockchain itself. It just has to do with the adoption. And so if there's any technology out there that people are finding value in and continue to adopt it, we're interested, and we're interested as investors. And once that long-term adoption trend stops or starts going another way, we're far less interested in the underlying technology.
Yeah, well, and I guess the question that comes up in every single time I talk to someone then is, what effect, if any, have you seen the pandemic having on, the industry as a whole and kind of its adoption?
So yeah, unlimited amounts of money in the economy and this view that governments are going to bail out everything does put a certain amount of risk appetite and leverage into the system, which we're seeing across the board in stocks and penny stocks and all the way to penny cryptos now. So that's definitely a side effect of all the actions by the Federal Reserve. But what I've seen across the board is at the same time that you have a lot of tourists coming out of this pandemic and trying all these different things to pass their time and spend their stimulus checks, you also have really well thought out theses coming out from institutional investors and adopters of the technology. And those take years for them to mature that thesis and get comfortable with it. And so these short-term price movements really don't change their decision or change their mind. They're slow in the uptake, and then they're also really slow in the downtake, right? So what I've pretty consistently seen is every time there's one of these sharp price movements, whether up or down, there is still very consistent investment interest and very consistent adoption interest from institutional investors and organizations. And so it's like anecdotal evidence, but a lot of institutions are buying the dip, right? That's happening right now because they've made this decision over 2 years, and this is to them just a fire sale, right? And to them, this is a great way to enter the market that they've been observing for many years now.
Yeah, and I guess, Mance, I'd be interested to hear from you as well. Any pandemic or unpandemic related trends that are happening right now that you see?
So we observed this directly, right? More than a year ago, pre-pandemic, we were realizing real interest from enterprise, especially large enterprise. And then March came and the markets crash. And as is normal under those circumstances, the innovation departments of global enterprise sort of stopped. They sort of stopped operating in a lot of ways. And those organizations, that type of organization, just focuses on fundamentals and doing what they need to get through the crisis. We still saw progress, and we still saw building of infrastructure and all these foundational blocks being put in place over the period. And then come this year, Q1 especially, business came on with a vengeance, right? And those same innovation departments, the same enterprises that had expressed interest pre-COVID are now not just expressing interest, they're building and preparing to go to market with real solutions. And so COVID was certainly a hit, but it was a temporary hit. And I think our business is mirroring what the rest of the world is seeing. It's sort of a V-shaped recovery. And, from my perspective, it's fantastic. I've never seen this level of real exploration and adoption by mainstream enterprise. That's what I look for to see if the industry is moving mainstream. It's not these consumer applications. While they're important, it's adoption by mainstream organizations. And I see that more today than ever.
Yeah, absolutely. Natalie, do you have anything to add, kind of either pandemic or non-pandemic related trends that you've seen going on recently?
Sure. I mean, from an enterprise software sales standpoint, 2020 was a record-breaking year. I mean, everybody needing to go virtual within like a month or two certainly put a lot of pressure on governments, corporations, educational institutions, churches, organizations who needed to find ways to serve their members using virtual platforms. So it actually, created a mini boom in the software sector. But Hamiz's point is just as important. That was kind of one side of COVID, but then there was the sort of unlimited money printing monetary policy of the Fed. Sometimes, it's been referred to as MMT, or modern monetary theory, where basically, the government can infinitely backstop, pretty much any entity. What that's done is, it hasn't produced immediate disastrous consequences, but it has shaken faith in the overall stability and even credit worthiness of the United States. And that's scary from a geopolitical standpoint. It is unclear what the role of the dollar is going to be going forward. It is unclear, what sound money is going to look like. The Bretton Woods economic arrangement was predicated on the US is the world's largest holder of gold. And that hasn't been the case for a very long time. So the interest in Bitcoin and the early bull run that we saw sort of suggests that, you know, people are looking around for a stable store of value, and preferably one that is non-sovereign, meaning not tied to a nation state, a particular nation state, because we are kind of in this geopolitical situation where trust between countries, specifically between the superpowers, you know, China, Russia, the United States, is at a low. And so Bitcoin has emerged as a kind of safe harbor for value as such, in an environment of geopolitical flux. And I don't think that that is a flash in the pan. I think that that is actually a long-term trend that's going to play out in some very interesting ways in coming years.
Yeah, and I guess, do you see NFTs, you know, playing a role in that as well? I'm curious.
No, absolutely not.
I'm curious.
NFTs are like, I mean, think about NFTs as like digital Beanie Babies. I mean, they're literally collectibles, and some of them can be extraordinarily valuable, but you're not going to form, you know, a new special drawing rights currency based on Beanie Babies. You're going to form it based on sound money.
Right.
And so drawing that distinction actually between Bitcoin and the world of NFTs and tokens is really critical. There's a kind of rigor to the monetary policy of the Bitcoin blockchain that is the linchpin and the anchor for the rest of not only the cryptocurrency ecosystem, but potentially for the global economy. So it's very important.
Yeah, and Hamiz, Mance, anything to add to that?
Well, no, I think Natalie makes an important point. When we think about tokens, there is a full range of token types. Back in 2017, so Bitcoin kicked it all off, right? But then in 2017, we saw the ICO craze, where companies realized that they could capitalize their startups by crowdsourcing money through the sale of tokens. Since then, what we've seen is organizations like the Interwork Alliance that have created token taxonomies that try to define the range of token types. NFT is one type, CBDCs are another type, security tokens are a third type. There are a bunch of them. There are a bunch of types of tokens. And I think that that's what is exciting, right? What's exciting is this notion, again, that the entire world is going to become a tokenized world. Tokens are going to take over everything. And it still remains to be seen the full implications of a tokenized world. And that's where the opportunity exists.
Yeah.
So I would agree with that. I do think that any business in the world that can be taught to a computer will be taught to a computer. And a lot of those will run on blockchains, because then you can truly replace businesses with software. And you're not just replacing one business with another business. You're replacing a business with software now. And NFTs are, like Mance was mentioning, not a new concept. They just have a new name that's become very popular. This concept existed, you know, many, many years ago. And I do think that digital collectibles are here to stay. And the NFT platform almost is going to allow creators and celebrities to create digital things of value that we've never even imagined before. So it's not just going to be a painting on a blockchain and a baseball card on a blockchain. It's going to be things that we haven't even imagined today. And all you've done is you've given entrepreneurs a platform, and now they're going to innovate. And I'm excited to see what they come up with.
Yeah, well, it looks like we're getting close to the end here, so I want to make sure I take some time for some questions from our audience. So it looks like first question here, and feel free, whoever wants to take this. There are a lot of promises of DeFi. There are a lot of promises around DeFi platforms such as Ethereum. Are there examples of real-world production-ready post-pilot DeFi implementations?
So when we talk about DeFi implementations, there is an entire ecosystem of DeFi companies. And let's say what we mean when we say DeFi. Actually, let's juxtapose it to CeFi, centralized finance, right? Centralized finance makes it possible to buy and, to borrow and lend money.
Right.
Well, there are those counterparts in a decentralized context, and there are the platforms out there that enable that today. And if you have tokens, necessarily it requires tokens. If you have tokens, you can go and use those platforms. You can put up those tokens as collateral to get loans. You can loan out those tokens and get paid interest, right? The decentralized version of banking, centralized banking, is already here, even though it's in an early stage, right? It's here and it's disrupting already.
Yeah, I agree with that. Like there's, and obviously not investment advice, but there's a blockchain bank that has lent out about $5 billion of asset-backed loans, and they don't have a investment committee and a underwriting committee to make that happen. That all happened completely on a blockchain, and each of those loans was made in about a minute. And anybody anywhere in the world can take that loan, and they'll have those spendable, digital assets in their account within about a minute. And so it's not really a question of when there's going to be a production one ready. It's already out there. And with $5 billion of loans outstanding, that makes it one of the largest banks in the US. Like if you sort of put it against, the assets that US banks have.
Yeah. Natalie, anything to add?
I think that's a pretty good summary.
Yeah, well, we've got another one here. One of the most significant issues of blockchain and its likes is interoperability. A good analogy is hard currency, where the US dollar is the standard with one caveat, exchange rate. How can a distributed platform address these two key interoperability issues?
When we talk about interoperability, let's say more conceptually what we really mean. We just said that the world is going to become a tokenized place. And when we think about tokens existing on public ledgers, interoperability then becomes the process of being able to move or use tokens from one platform to another. Or a token needs to be able to exist in some form on multiple platforms. So that's what we mean when we say interoperability. It's the ability to use tokens issued on one platform on other platforms as well. That infrastructure is being built out already, right? There are what we call token bridges and various organizations that make it possible to bridge tokens. Basically what happens is if you have tokens issued on one platform, you can lock up some number of those tokens in an account on that platform and, quote, move them in a wrapped form to a different platform so that they can be used on that other platform. And when you're finished using them over there, you can dispose of them and unlock them on the original platform. That's what we mean when we say interoperability today. And again, that's infrastructure that has been being built out for the past few years. It's all been going on, unbeknownst to most of the world. And a lot of it happened in the middle of COVID, right? And so interoperability is something that the industry as a whole is resolving even as we speak.
Yeah, Hamiz, Natalie, anything to add?
No, I think Mance did a good job with that. That's exactly right.
Yeah.
Yeah, I was a little unclear on how interoperability was being defined in the question, like exchangeability of currency. I mean, that's something that digital platforms already enable very well, and blockchain-based digital currencies ride on those capabilities.
Yeah, I'm not sure that's all the info I have right here, but it looks like we're really close to the end. So just to kind of wrap everything up, this is our State of Innovation event. So what's one thing about blockchain technology that you would want our audience to take away from, Natalie? But why don't we just start with you here?
Sound money. Bitcoin is sound money.
Awesome, Hamiz.
Yeah, I think we're still in the early innings, probably the second inning. And the UI has to become so clean that you use a blockchain, you send money using it, and you don't even know that it's a blockchain behind it. That's when you're going to be sort of like too late, and we're going to be in the last innings of the game. But you still kind of have to be a coder to interact with these things. So these are the early days, even though it might not seem like it.
Right, Mance?
You know, I was around when the World Wide Web grew up, and I remember trying to tell my mother what it was. And it was difficult to do until I showed her email, right? We're at the point where apps or dApps, distributed applications, are now beginning to go mainstream. NFT is a good example of this. When the population at large can see and play with the dApps that result from the infrastructure, then they'll understand it. And we're right there. We're right on the edge of that. It's not something that you can ignore.
Yeah, well, absolutely. And thank you guys, everyone who's joining us today. Thank you to our panelists. We will have a recap of this conversation up on NTX Inno in the next day or two. And again, thank you to our presenting sponsor, Thomson Reuters, and to our founding partners, Accenture and UT Dallas. Thanks to everyone, and y'all have a great day.
Thank you.
Thank you.
Thank you so much.
Bye.